Hello everyone and welcome to my YouTube channel where I teach economics useful for students of class 11th and 12th. And this is going to be a continuation of the series in the chapter National Income and Related Aggregates. Just a quick recap on the videos which I've already uploaded in my YouTube channel. In the first video, I explained about the basic terms about national income. Now in this video, we will learn about the topic circular flow of income. So without wasting much time, let's directly move into circular flow of income. At the end of the last video, I had explained that there are four basic factors of production: land, labor, capital, and organization. While land helps us to earn rent, labor helps us to earn salary or wages, capital helps us to earn interest, and organization helps us to earn profit. So rent, salary, wages, interest, and profit, these are the various components of income which we earn from factors of production. So in this video, we are going to understand how do we exactly earn income and how is this income helpful in the economy. The first question which we have to ask ourselves is, how is income generated? Income is generated mutually. Only when there are two or more people in the economy will there be a chance of income. Otherwise, it is only wealth of one single person. But since we help each other mutually by providing services, by providing raw materials and gaining finished products, this is how income is being generated. Just a scenario of a farmer and a baker. Now, a farmer is the one who provides the raw materials of wheat flour, which is very, very necessary for bread. And so the farmer is the one who is providing raw material to the baker. In turn, the baker will pay a certain amount to the farmer, and that is going to be the income of the farmer. At the same time, the baker uses these raw materials and prepares this wheat flour into bread, and he supplies this bread back to the family of the farmer. And the farmer also has to pay for the price of the bread, and so that price of the bread becomes the income for the baker. So this is how income is mutually generated. Payment is received for raw materials by the farmer, and the farmer makes expenditure on bread. And so therefore, farmer's income comes from the baker, and the baker's income comes from the farmer. And so this mutually generated income can be understood in a diagrammatic form called as circular flow of income, where income is generated mutually and is depicted in the form of a circle. So to define what is circular flow of income, the definition is there on your screen. It is nothing but income generated out of mutual payments between households and business sector for factor services as well as goods and services. So let's try to analyze this definition. The first is mutual payments. The household, the farmer, had paid to the baker for bread, and the baker also had paid the farmer for raw materials. And so mutual payments are nothing but payments made between two sectors of an economy. If we understand the farmer as the household sector, then the baker will be the firms or the business sector. So mutual payments are done between the households and the business sector for factor services. Now factor services can be understood as the raw materials provided. In the example which I had given you, the farmer had provided the raw material of wheat flour to the baker, as well as goods and services. That's the last part of the definition. And the goods and services can be understood in the example as the finished product, that is the bread. Bread was provided by the baker, which was prepared from the raw material, and this bread is now being consumed by the farmer. And so income generated out of mutual payments between the households and business sector for either factor services as well as goods and services is called as circular flow of income. We will now move into a simple diagrammatic representation of the circular flow of income. And for your syllabus, we have the two-sector model. Basically, in an economy, we have four sectors, that is households, firms, government, and foreign sector. But to understand circular flow of income in a very easy and simple way, we will just concentrate on only and only two sectors, that is households and firms. So the first thing is that the households provide factor services for firms. Now factor services are nothing but raw materials from which finished products can be prepared. In the example I had given you, the farmer provides wheat to the firms. And so this is factor services. Now in return for factor services, the firm has to pay money to the farmer or the household, and so that payment made back to the households is called as factor payments. Payments made on using factor services is called as factor payments. On the other hand, the firms are now producing finished products from the raw materials, and they are supplying the finished products or selling them to the households, and the households will have to pay for these finished products, and that is called as expenditure. The money which is spent on purchase or consumption of finished products is called as expenditure. So if you see this diagram here, the inner circle is containing of goods, and this is called as real flow. We have this inner circle here moving from households, that is factor services, and finished product. This is the goods moving from one sector to another, and this circular movement is called as real flow. On the other hand, you see the outer circle, we have factor payments from the firms moving to households, and that money once again coming as expenditure back to firms. This outer circle is called as money flow. So the circular flow of money in a two-sector economy has basically two flows, real flow and money flow. As I explained in the previous slide, real flow is nothing but the movement of goods, either finished products or goods and services. And the next one is money flow, which is basically very easy to understand, the flow of money. Now the circular flow of money is based on certain assumptions. First assumption is there is no difference in payments. Whatever was paid by the household to the business sector is exactly the same amount which has been paid by the business sector to the household. There is no difference. There is no difference in payment at all. And because of that, we are moving to the second assumption. Because there is no difference in payment, neither is the household saving anything, nor is the business making any profit. For example, if the farmer had supplied raw materials worth 100 rupees, the bread supplied by the firms to the household will also be costing 100 rupees only. Now, this is why the circular flow of money is just a theory to understand how income flows between sectors. And since there is no difference in payments, we also have the third assumption. There is no leakage in that circular flow. For example, spoiling of goods, or there are no thieves. So since there is no spoilage or theft, the entire amount will be flowing from household to business sector, and once again back from business sector to household. Now this circular flow of money, that is basically the two-sector economy, is just an imaginary example just to make us understand exactly how money flows from one sector to another. What are the results of the circular flow of money? The results are as follows. The first is total production. Whatever has been produced either by the farmer or the household sector or by the business is the total consumption. Whatever the farmer has produced is totally consumed by the baker, and whatever the baker has produced is totally consumed by the farmer. Factor payments is equal to factor income. This is very, very easy to understand. The business or the firms pay factor payments to the households, and that is basically the income of the farmer or the household sector. On the same way, you can also understand that consumption expenditure that is made by the households on using finished goods and services is exactly the income of the firms. So one sector's income is the other sector's payment, and one sector's expenditure is the other sector's income. And then finally, real flow, or the flow of goods and services, is equal to the value of money flow. This is how money or income flows from one sector to another in a circular flow form, and this cycle continues endlessly. Now, this was just a theoretical example, as I've been stressing again and again. This does not happen in reality. In reality, the circular flow of income is much more complex. There are many more sectors involved. There are leakages, there are spoilages, there are theft, there are profits earned, there are savings, there are taxes, there are benefits, and so on. So just to give you a glimpse of exactly what happens in reality, we have a small presentation here. So let me explain only the money flow, because if I use the real flow or the flow of goods and services, the entire example is going to be much more confusing. So let's see, we have two sectors, that is households and firms, and the household spend or do expenditure on whatever goods and services they have purchased from firms. In the same way, firms also make factor payments or payments to household for using up their raw materials. Now both these people will have savings, because whatever extra they are saving, and they will save in something called as the financial sector, for example a bank or a cooperative society. Since the banks are the ones who act as a heart pumping the blood into the body, the same way the financial sector will also act as the heart of the economy, since it pumps money from one sector to another. So in this situation, they are now taking the savings of the households and firms. At the same time, the financial sector also provides loans to both the households and the firms. But this is not yet the end of this flow. The sector is much more complex, because both households and firms provide taxes. And who is the authority that takes taxes? You're right, that is the government. The government takes taxes from both the households and firms, but it just does not take. The government also provides benefits such as services to household and services to firms. The government also purchases raw materials from the household and also purchases finished products from the firms. So this is how every single sector not only takes money but also spends money. But still we have one more sector remaining. We have the foreign sector, where import and export happens with this. So the entire economy, that is household, government, firms and finance, they are involved in importing and exporting from and to the foreign sector. And so even here right now, this is just a small glimpse of what exactly happens in the economy. In reality, the economy is much more complex. So now we have completed and we come to the end of this video. Thank you so much for watching till now. In the first video, you can check out my YouTube channel where I explained about the basic terms, and in this video we completed about the circular flow of income. Stay tuned in my channel to understand the next video where I explain about the basics of national income. Thank you so much for staying tuned till now. Stay educated and stay safe.